In 2025, the financial world has changed so much that your credit score is no longer just a number at S, practically your financial identity. Whether you get approved instantly or rejected immediately depends on how strong or weak that number looks to lenders. And the reality is simple. There are people who glide through the system, locking in the lowest interest rates, getting priority approval, and being treated like VIPs by banks. And then there are people who get denied, ignored, or pushed toward high-interest products that drain their money month after month. But the good news is that you never have to stay in that second category. You can switch sides much faster than you think. If you know exactly what works in 2025, the tools are different now. The algorithms have evolved. Fintech systems have become smarter, and lenders rely more than ever on behavioral data, long-term patterns, and consistent financial habits. This is why the old advice people used years ago isn't as effective today. You need strategies that are updated, tested, and proven to work right now. And I'm going to break down the top 5 fastest ways to skyrocket your credit score this year. Strategies hardly anyone talks about, but the people who understand credit deeply use constantly. This isn't coming from guesswork or something I heard online. I personally manage more than 51 credit cards strategically, and my credit score has remained in the 800 range for years. My scores today, 827, 838, 822, aren't just numbers. They're the result of systems I've built and refined. Systems thousands of people have used to enter the 800 club. So everything you hear in this script is based on real results, not theory. Let's start with something almost everyone thinks they understand. Credit card utilization. People know it matters. They know it affects more than 30% of the score. But most people don't understand how utilization makes the biggest difference, or how quickly it can change your score when done correctly. They pay after the statement closing date, thinking they're doing the right thing. But then the reported balance hits the credit bureaus, and the score drops or refuses to increase at all. The real advantage comes from paying your balances down to zero before the statement closing date every single month. When your cards report at 0% utilization, credit scoring models see absolute discipline, and discipline is what they reward the most. Some people on the internet will tell you, you need to let a balance report or your card won't count as active, but that's false. Zero balances still count as full activity, and in fact, they show a level of responsibility that scoring algorithms love. When someone sticks to this habit consistently, they often see their scores rise dramatically in a matter of weeks. Now let's talk about a strategy most people have never even heard of: a secured personal loan done the right way. Traditional banks don't want you to know about this. They don't offer it because it helps you build credit too efficiently. And they earn more money from people with weak credit who stay stuck in high-interest loans. Credit unions, on the other hand, focus on long-term relationships, which is why they offer secured personal loans that are perfect for credit building. Here's how it works. You open a secured personal loan with a 24-month term or longer. Wait for it to post to your credit report. This part is essential. Once it shows up on your report, you pay off 90% of the loan in a single lump sum. The remaining 10% stays active, and you put it on auto pay for the full remaining term. What does this do? It boosts your credit mix, adds installment loan depth, builds flawless payment history, and keeps your debt extremely low at the same time. Lenders love seeing long-term loans with consistent on-time payments, and your credit score gets rewarded for that pattern. But if you pay off the loan too early, before it hits your report, the strategy fails. The system never sees the full loan amount, and you lose the benefit entirely. The loan term also matters. 6-month and 12-month loans don't help, and sometimes they even hurt. You want 24 months minimum, and 36 to 48 months if you want maximum scoring impact. Now we move into the digital credit building world, where Kovo stands out as one of the most powerful installment credit builders available today. It has a unique system because it adds an installment trade line to your credit report with absolutely no hard inquiry, no APR, and no fees. This is rare. Most credit builders either charge you money, put you at risk of late fees, or hit your credit with a hard pull. Kovo does none of that. You not getting this loan to borrow money, you getting it to build a stream of predictable on-time payments. And because Kovo never reports you late, it protects your credit during difficult months. Most people don't realize that payment history controls 35% of your credit score, the single largest factor. So adding a safe, long-term, Guaranteed on-time payment history is one of the easiest ways to grow a weak credit profile. And with Kovo reporting to all major bureaus, plus Innovis, your credit depth becomes even stronger. Now let's talk about one of the most underrated opportunities in credit building: rent reporting. Your rent is probably your biggest monthly expense. But it does nothing for your credit score unless you purposely get it reported. Most rent reporting companies will report you late if you miss a payment, which scares people away. But Boom Report is one of the few companies that reports on-time rent payments to all 3 bureaus, while never reporting late payments. This removes all risk while giving you maximum credit building benefit. Boom also allows you to report up to 24 months of past rent history as a one-time addition. Imagine 2 years of on-time payment history suddenly appearing on your credit report in a single update. That alone can add enormous strength to your profile, from score increases to stronger rental and loan applications. And since Boom works with payments made through Zelle, Cash App, Venmo, checks, or bank transfers, as long as the payment is traceable, you can build credit without changing how you pay rent. Just make sure your lease and landlord are verified properly, because accuracy is what makes the reporting legitimate. This strategy is especially powerful for people who don't have many accounts on their credit report. Rent history fills a massive gap in those cases. Now we move to the single most powerful credit score accelerator: becoming an authorized user the right way. This is the technique wealthy families have used for years. When you're added as an authorized user to a well-lodged credit card with a high limit, 0 late payments, and low utilization, your credit profile inherits that card's positive history instantly. Your credit age looks stronger overnight. Your utilization becomes more balanced. Your overall profile looks more mature, more stable, and more trustworthy. You want to be added to a card that's at least 2 years old, preferably 5 or 10 years old, with a limit of $5,000 or higher. The higher the limit and the older the card, the more dramatic the impact is. But here's the most important rule: do not use an American Express card for this strategy. Amex does not transfer historical data. They only report from the day you're added, which eliminates the benefit entirely. Every other major issuer works, but Amex does not. Another thing people misunderstand is liability. As an authorized user, you are not responsible for the primary cardholder's past or future charges. You're responsible only for the card issued in your name, nothing else. This makes the process safe and simple as long as the person adding you is financially responsible. But you must avoid the mistake of being added to a card that's new or one carrying high utilization that will backfire fast. Choose wisely and only accept an O spot on a card with perfect history and excellent management. Your credit score is either a tool that opens doors or a trap that keeps you locked out of opportunities. Strong credit gives you cheaper loans, better jobs, better insurance rates, better housing opportunities, and the ability to build wealth faster. Weak credit does the opposite. The path you choose will determine your financial quality of life for years to come. But if you start applying these strategies today, you can see meaningful results within 30, 60, or 90 days. And if you're serious about improving your financial life and want more proven credit building guidance, make sure you subscribe to Finance Glow.